Hey guys, welcome back to FreckleFace Finance, where we discuss personal finances open honestly so that you can live the life that you deserve. So right now the craze is all about student loans and student loan repayment, and that probably is because we have not made a student loan repayment in 3 years, and so a lot of people have a lot of questions because there are tons of people who have never made a student loan payment at all. And so there's a lot of information out there, and unfortunately, before you take out a student loan or while you're in the process of college and taking out loans, there's just not a lot of information given to you. And so we have these young people and these students taking out thousands and thousands of dollars but don't know anything about repayment or the repercussions of taking out those loans. So if you are interested in going to college or you have a student loan yourself and you just want to get some more information, this is the perfect video for you. So if that sounds like something that you are interested in, then just keep on watching. So I actually looked it up because I was very interested to know how many students actually take out student loans. And so about 68% of college graduates have student loans. And so that applies to the majority of people. And unfortunately, it's just wild to me how we're not giving those students information prior to them taking out the loans. So hopefully this video will kind of bridge that gap and provide everything that you need to know, or at least the top 10 important things that you need to know when you're taking out student loans. So without further ado, let's get into it. So first and foremost, you need to remove the guilt. I need you to remove the guilt. You just heard me say that 68% of people who graduate from college actually took out student loans, and it's actually to your benefit. So the first thing that you need to know about student loans is that you are investing in your future, and you will make on average 84% more than your counterparts who did not. So congratulations. So the second thing that you need to know about student loans is that the school does not matter. So don't get so caught up on going to these fancy private schools. Definitely don't go to a private school, y'all, if you can help it. But yeah, you don't need to go to a private school. You don't need to go to a school that's ranked top 10 in the country, top 20 in the country. In reality, these jobs do not care about what school you go to. Now, if you want a very prestigious career, like maybe you want to work at Google or you want to work at one of the top 5, then maybe the type of school that you go to matters. But for the rest of us regular people, the college or the university that you pick does not matter. So as long as you get a degree, that is what the job market is really looking for. They don't really care what school you go to, so it's no reason to pay premium dollar amount for a degree when you can pay at a discounted rate. Number 3, don't borrow more than what actually makes sense. And so what I mean by that is you need to be looking up how much on average your degree costs and then how much your salary potential would be. So for example, if you plan to be a teacher and you're going to school for 4 years and then getting a teacher license, let's say, I'm just going to make up a number, on average that costs about $30,000 a year. And teaching, your salary may be on average $30,000 a year. So if you plan on being a teacher and you see that on average teachers make about $30,000 a year, and you see that on average teachers pay about $30,000 in order to obtain a degree, then it doesn't really make sense for you to pay $100,000 in order for you to get a teaching degree. The math just does not math in that scenario. And so you really want to see what on average people are paying in order to obtain a degree that you are interested in, as well as finding out what the average salary is for that career field, and then trying to pick the school and pick how much you want to pay for your degree or take out for your degree based on those factors. So unfortunately, the way that the student loan program is set up, you can actually take out a lot more than it's going to cost in order for you to get your degree. And I don't know if it's set up like that on purpose to keep us in debt, but no doubt they will let you take out $100,000 if you want to, when your degree actually only costs $30,000. So you definitely want to be mindful of that. A lot of people like to trick off on their refund checks. You don't want to fall into that trap. You want to make sure that you're borrowing just the amount that you need in order to obtain your degree, and pay for any essentials like books or anything like that that you need in order to pursue your education. So just be mindful of that. So the fourth thing that you need to know is that there are different types of financial aid that you can take out. I can think of 4 off the top of my head, and I'll go into those very quickly. So number 1 out of those 4 financial aid options that you can take out is grants. So a lot of people qualify for the Pell Grant. That is a grant, and so you actually do not borrow money in order to receive that, and you don't need to pay that money back once you graduate. It is just free money given out by the federal government in order to help lower income students obtain a degree. So Pell Grant, you don't have to pay back. The second type of funding that you can get is a subsidized loan. And so a subsidized loan is actually the best type of loan that you can get. It is a loan from the federal government where you actually do not pay interest while you are in school. So this has the lowest risk to you when it comes to different types of loans that you can set up. So if you're able to use just a Pell Grant and a subsidized loan, that is perfect. And then we'll talk about the third and fourth options that you can take out for financial aid. So the third type of financial aid that you can get is called an unsubsidized loan. And so that is a loan provided by the federal government. And pretty much what that means is that as you're in school, your loan is going to start collecting interest from the moment it is dispersed to you. And so different interest rates will apply to different students. I know when I was in school, I think they had a varying rate from you can either get a 3% rate up to a 6.9% rate. It really just depends on the year that you take it out, but it will start collecting interest from the moment it is dispersed to your account. So if you're actually in a position to where you can start making payments on your student loans while you are in school, you may want to target those unsubsidized loans first before you move on to the unsubsidized loans. That's just a quick tip. So the fourth and my least favorite type of loan is the Parent Plus loan, Student Plus loan, any type of private lending. All of those come with increased risk, but I will talk about those really quickly. So you actually can get a loan from a private bank in order to pay for your student loans. I personally do not recommend this because I think that there is an increased risk with that, especially like hits to your credit. If you are disabled and for some reason unable to pay back your student loans, there's less forgiveness options with that. So I personally recommend keeping all of your student loan or your financial aid through the federal government as opposed to going to private lending. So I'll definitely leave some links down below in the description box so that you can check out other cons to private lending, but I don't recommend it. I think you should keep everything with the federal government just because you have certain protections and less risk when you do that. So take that as you will. I'm just a random girl on the internet. This is not financial advice. I'm just giving you my own opinion on what I recommend based off what I did myself. Okay, so now that I talked about the different types of loans that you can get, let's get back to the list on number 5 of top things that you need to know when it comes to student loans. Okay, so repayment plans. So when it comes to repayment plans, once you graduate, you'll have to start paying back your student loans. And so when you log into your account, you're gonna automatically be set up to be on a 10-year payment plan. So that can either be a good thing or a bad thing depending on your financial situation once you graduate. So, for example, if you have tons and tons of loans, a 10-year repayment plan may be very aggressive for you. So you may find that you're unable to make the payments based off the 10-year repayment plan, and you may have to change that. Now, on the other hand, if your payments are a little low and you come out of college and you have a high-paying job, you can make more than the minimum payment that they are requiring you to make. And of course, that will lead to you paying off your student loans in less than 10 years. So I recommend that you keep it at the 10-year mark. If it's too high, of course, you're gonna have to make changes, but if it's low, you can always add and make additional payments and then make payments directly towards the principal and not towards the interest. So another option that I want to make sure that you guys are aware of is the PSLF, and I believe that stands for Public Service Loan Forgiveness. And so these are for people like, for example, teachers who work in low-income areas, people who work for nonprofits, and of course, people who work for the federal government. And so this pretty much is an incentive. And so if you make payments, keyword is if you make payments for 10 years, then everything after that will be forgiven. So for example, if you have a $20,000 student loan, right? And then after 10 years, you've paid off $10,000 of it, and then you will have the last remaining $10,000 forgiven. And so the key to this is that as soon as you find out that you're going to be working in a qualifying job, so a teacher in a low-income area, if you're working for a nonprofit or federal government, as soon as you accept this position, you need to make sure that you apply. And so I have seen horror stories when it comes to this. I don't want to scare y'all though, okay? But definitely do your research. I would not bank personally on this program. Just because I've seen that the federal government has actually been sued because of the outcome of this program, where people have spent 10 years making payments and then the loans were not forgiven. And so you don't want to make minimum payments for 10 years thinking that the remainder, you know, $20,000, $30,000, $40,000 of your loan is going to be forgiven, just for you to find out that, oh, you didn't, you know, apply for the program. So you actually have to apply for the program. I believe that you have to send in like pay stubs and stuff, and like really document and verify that you work for one of those qualifying job positions, and then apply for the program, get your acceptance, and then you can count those payments towards your forgiveness. So I just want to put that out there. I personally would not bank on that. If you're interested in this program, I would definitely say do your research. The federal government has been sued for not forgiving loans that fall into this category. And so you definitely want to be mindful of that and not let it, you know, be all of your eggs in one basket and let it be your end all be all. So just want to throw that out there. If you are watching this and you have applied to that program and you have actually had your loans forgiven, you know, please give us some hope down in the comments below. I'll be very interested. I personally have not seen anyone have their loans forgiven after they've made the 10 years worth of payments. I've seen a lot of articles where people were upset. I've seen articles where people were suing. So I've only seen the negative side. So if you have a positive outcome to where the student loans were forgiven after that 10-year mark, you know, please leave us a comment down below, because I'll be very interested. And then, you know, of course, I would love to hear a good positive outcome for that type of scenario. So I just wanted to make sure that you guys were aware of that program that is offered to you, and that if you're watching this, to make sure you apply for the program and then do your 10 years worth of payments. So my dream for everyone watching this video is for everyone to be able to pay off their student loans in 10 years or less. So with that being said, there are alternative options that you can sign up for when it comes to repayment. So they have income-based repayment, they have repayment options based off of once your salary increases, your payments increase. They have financial hardship payments where you can just make very minimum payments, or even just make payments toward the interest and not towards the principal. So there are a whole bunch of different options that you can look into when it comes to being able to make sure that you make your student loan payments on time and in full. So I'll go ahead and leave a link in the description box below so you guys can check out the different repayment options that they have. There are a ton of them. Like, I feel like for the most part, they really do want to make it feasible for you to pay them back and not go into default. Number 6, now we're sticking with the repayment type of theme here in this section. Number 6 is that you will actually have a grace period from the time that you graduate, from the time to when you have to make your first payment. And so that grace period is going to be 6 months. Now the catch is you have to make these payments whether you graduate from college or not. So it doesn't take into effect 6 months from the time that you graduate. It happens 6 months from the time that you stop enrolling in school. So for the most part, a lot of your loans, while you're in school, you're not going to have to make any payments. They're going to be deferred. Your subsidized loans are not going to be collecting interest, while your unsubsidized loans are going to be collecting interest. Grants you don't have to pay back. But once you stop enrolling in school, it's like the gods know, and they're going to start looking for those payments, right? They're going to start sending you emails. They're going to start sending you letters. So for the most part, you will have a 6-month grace period from the last class that you enroll in when it finishes your last semester, whether you graduate or not. And so just take that into account, that there is a little grace period, which I don't know what they call that, but I know I was freaking out. I was so stressed out about it. And so it's really good to start looking for jobs before you graduate. So if you don't listen to anything else in the video, please heed that warning prior to graduation, because that 6 months will go very quickly. Okay, so 7, how do you actually make payments? So you guys know I'm a big advocate for automatic payments. It just makes things so much easier. So once you graduate and you stop enrolling in school, they gonna find you. They will find you. You want to make sure that you keep your contact information updated with your school, because they're going to use that information from when you fill out your FAFSA in order to contact you. And so they will send you emails, they will send you letters to your house, and if they can't get in contact with you, y'all, they will reach out to your parents. They will find you. You're gonna receive information in the letter that they mail you or in the email, where it's gonna have information on who your servicer is. And so I know I was a little bit confused about this when I graduated, because I don't know why, I just thought that I was gonna be paying the school, but in fact you're not. Your federal student loans are gonna be sparsed out. And so there are going to be different companies who are pretty much going to pick up your student loans. And so what that is called is a servicer. And so there's going to be a company that is going to be your servicer for your federal student loans. And so your federal loans are going to be given to one of these servicers. And so when I first started out, I was with FedLoan. And so now I'm with Nelnet. So they can sell your loans to different servicers amongst the group. But you have FedLoan, you have Nelnet, you have Navient, Fannie Mae. There's tons of them. So you won't know specifically who your loan is going to be serviced by until you get the information in the mail. So you're gonna have to look out for that, and that's gonna give you information on how to log in, how to create an account, and of course how to set up automatic payments. Okay, and so number 8. Unfortunately, it sucks that I have to talk about this, but this is the case amongst a lot of student loan borrowers. There is going to be predatory lending that is going to try to pounce on you, okay? So you're going to start receiving a lot of different offers to consolidate your loans. You're going to receive a lot of offers from private banks, equity companies, like people who just want to give you money to help you pay back your student loans. You're not going to want to accept it. It is not in your best interest to accept it in most cases. Of course, if it sounds like something that you are interested in, then please by all means seek out a personal finance advisor or your accountant. But I would say for the majority of people, if you're watching this video, don't fall into the predatory lending when it comes to paying off your student loans. And so when you log into your account to make that first payment, what you're gonna see is that each time that you accepted federal loan, student loan servicing, you're gonna see that each one of those is considered a separate loan. So I know in my specific example, when I graduated, I believe I had, it looks like 8 different loans. And it's because I had the subsidized loan as well as the unsubsidized loan for each year, for each semester. But it looks like a lot. And so let's say my payment was $100 that I had to make a month. You'll see that $5 will go to one loan, $10 will go to another loan, $12 will go to another loan. In some cases, that can be, it can be really high, like your payment can be really high. And so private companies, banks, they will offer consolidation to where you can put all of your loans into one single payment, and then they say that it's going to keep better track of it, that your monthly payment is going to be lower, but the interest rate is not going to be the same, right? You're not going to have the same protections that are offered to you when you have a loan through the federal government. As far as like the disability thing that I was telling you guys about, death, right? Federal student loans are forgiven upon death. I hope that that, you know, doesn't happen to anyone in an untimely manner, but that is the case, right? So if we're a channel and we're talking about, you know, asset protection, we're talking about generational wealth, you want to have your debt be forgiven upon death, right? You don't want to have, you know, that debt come out of what you would have left your children or your children's children. So I definitely think that that is a big proponent to leave it as a federal student loan as opposed to consolidating it and making it a private student loan. So yeah, that's that. Now, with that being said, when you do make your payment to the federal student loan, it is just going to be one payment. So it's not going to show in your account that $5, you know, was withdrawn from your bank account, $10 for this, $10 for that. It's going to come out as one payment, and then once you make that payment to whoever your servicer is, they're going to divvy it up once it gets there. So it really does not impact you that much. It's going to be way more of a pain for you to try to consolidate. And like I said, I consider consolidation from private companies to be predatory lending. I definitely don't think that our young people are equipped with the financial knowledge to make that decision, and unfortunately they start reaching out to you as soon as you have your payments start to be due. So just keep that in mind. It's not as rosy as it seems, and if it sounds like something that may work out in your best interest, just make sure to talk to a financial planning professional before you make that decision to consolidate. Okay, so number 9 on this list is you have a lot of options if you're unable to make your payments. And so you have an option for forbearance or for deferment. And so the big difference, they're pretty much the same thing. The big difference between that is that deferment means that in this period of time, you have a $0 amount for your payment and no interest will be collected in that time. and they pretty much are the same thing. That means that you have a $0 payment due. The big difference is that if you have a forbearance, and that means even though you have a $0 amount payment due, your account will continue to accrue interest. Now, I've seen different amounts of deferment or forbearance. The most that you can get is 12 months at a time, and I believe you can get it for up to 36 months in total, right? So you can do 12 months and then you have to reapply, and you can do 12 months, reapply, 12 months, reapply, and you get a total of 36 months that you can defer or have a forbearance. So just keep that in mind. Don't stress out about it. I think a lot of people right now are selecting to have forbearance or deferment, and so if you're unable to make your payments, it's always best to reach out and don't just ignore it. So yeah, those are your two options if for some reason you're unable to make a payment. You also have an option to skip payments, so it doesn't have to be a solid 12-month period at a time. You have an option to contact your servicer and ask to skip a payment, and then you can just make it up the next month, or you can just skip a payment and then just pick up where you left off at. Either way is better than not contacting them and just pretending it doesn't exist. So number 10, last but not least, what happens if you do not pay? And so unfortunately, it does not just magically go away. You really can't avoid it. They coming for you, like they coming. So if you have a federally backed student loan, in 270 days, your account will be considered in default and it will be sent to collections. They have the ability to confiscate your tax returns. They have the ability to garnish your wages. Like, it's not something that, you know, you want to be in a default status, right? As far as private lending, and so if you consolidate, you will be considered under private lending. So after 90 days, your account will be sent to collections. They have the ability to sue you. They don't have the ability to confiscate your tax returns, I believe, unless they do take you to court, but they do have the ability to garnish your wages. And so those are very like hefty negative impacts that can have on your life, especially if you went, you know, all year thinking that you're going to get an income tax and you have plans to invest and do all of these things, and it just never shows up. So you don't want to have your wages garnished. Like, you definitely want to make sure that you're being responsible and, you know, taking ownership of your financial health and of your life. So in my experience, what I've seen, what I've heard, all of my friends, my family members, I feel like for the most part, they are very willing to work with you. So it's not great to just pretend that it doesn't exist. For the most part, if you contact them, if you want to get on a lower payment plan, if you want to skip a payment, if you want to defer and skip 12 payments, it is definitely an option to you. So just keep that in mind. Alright, you guys, so that is it for today's video. I know that was a ton of information. Hopefully you found it very helpful. And if you found it just a little bit helpful, please make sure to give me a thumbs up so it can be pushed out to a larger audience. I really enjoy making these types of videos because I really feel like they help people. I try my hardest to make videos that I felt like I wish that I had. You know, I'm just a very big proponent of sharing information. So, alright guys, thank you so much for watching, and I'll see you in my next one. Bye.